Welcome back to the second half of the Futures Show here on the TD Ameritrade Network. I'm your host, Ben Lichtenstein. We're now less than 60 minutes away from the cash open for stocks on Wall Street. Ladies and gentlemen, we have Scott Bauer. We have the CEO of Prosper Trading Academy joining us this morning. Scott, welcome. Thank you. Thanks to you. I wanted to dive right into the RBA, the Bank of Australia. They left rates unchanged. No surprise there, but was there anything in the statement that stood out to you?
So a couple things. They are increasing their bond buying program, which many thought was not going to happen yet. That did come as a surprise to them. And they're doing this. What they're seeing there is much like we're seeing here, Ben. Their home prices, the home buying market has absolutely been on fire. Home values have hit record highs. And their central bank believes that the low interest rate environment is the most important element to their economic recovery. So they're not raising rates this year. They're not raising rates next year. They're actually even going out all the way to 2024. So much like we've heard Jerome Powell say, we're not raising, they're doubling and tripling down. But the fact that they did expand their bond buying stimulus did come as a bit of a surprise.
Okay, now you mentioned strength in housing. They've also seen some recent strength in the unemployment numbers, labor market. They saw the rate fall recently to 6.6% from 6.8% in December. The participation rate inched up during that time, and they're targeting also, much like us here, that inflation rate. They say core CPI is expected to be 1.25% and 1.5% for the next year. Scott, the Bank of England coming on later on this week. We've been seeing a trend here, to say the least. Whether you're talking the FOMC last week, we had Bank of Canada, the ECB, the Bank of Japan. I mean, they're sitting on their hands right now, and they're in a bit of a wait-and-see mode. Should we expect the same from the BOE?
Absolutely. I mean, there is definitely a coordinated effort really across the globe in terms of what central banks are doing. And most of them, and I think we're going to see the same out of the BOE, are saying that, the first part of this year could be rough, but they really see pickup in the second part of the year. So I don't think the Bank of England is going to do anything. They may actually downgrade their growth forecast for GDP overall in 2021, but I bet that they're going to mention that they're going to look for a second half recovery and try and look beyond the current lockdowns and the downturns. They're still targeting 2% inflation like we are as well. They're going to let their economy run hot, and I just don't see how they're going to implement negative rates this year.
It'll be interesting to watch as this black cloud kind of clears, the Brexit black cloud clears, how economic conditions fare there, and some of the recovery efforts as well they've struggled with also. Let's talk a little bit about the U.S. dollar. It's been firming up some, even as we've seen strength in the pound here, and, well, economic data here in the U.S. seems to have outpaced relative to Asia and Europe.
It is firming up a little bit. I think most of that is really on the hopes and the progress of a stimulus plan. And I know maybe that, took a little bit of a, not a U-turn, but a little bit of a jog last night, the 1.9 versus the 600 billion number. There's probably going to be some meeting of the minds in the middle. So the dollar has really been, kind of risk on, if you will, based on stimulus hopes here. But there probably is a top here, Ben. I don't see it running away whatsoever.
Scott, let's talk a little bit about rates. We've been discussing the transparency aspect associated with Fed Chair Jerome Powell, the Fed's comments in general and where they stand right now. Everybody seems to have this idea of the 1.25% for the TNX, but we seem to be retreating a little bit off that upper level right now. Is this what we should expect again, just kind of this ebb and flow, and we'll see a recent run up and everybody will kind of, the sky's falling, the Chicken Little costumes will come out of the closet, and then all of a sudden they'll pack them back away again, and hey, we could see rates lower for longer, and this is good for the market and good for housing. I mean, this is just noise at this point. Correct me if I'm wrong.
It's range-bound noise, though I would say over the last 3 to 6 months or so, the range that we've seen is ticking higher.
Okay.
Albeit still range-bound, it is going up, a little bit on the upper band. So, yeah, that 1.25 on the TNX, I don't know that we're really going to break through that anytime soon here, but what we saw earlier in 2020 and even into the third quarter, we saw a range in the TNX, Ben, of 50 basis points up to, let's say, 1%. That range has now heightened a little bit. We're probably more like 0.75 or 0.8 to 1.2.
Scott, lastly, a very busy week ahead here in terms of jobs data. There is some concern out there after last week's non-farm payroll report. What do you have your eye on over the next few days as you kind of gear up and get ready for that report on Friday?
Yeah, it's earnings. It's really earnings until we get to Friday morning. We'll get to Friday morning. We'll get that January number. I don't think expectations are really high. I think, people are actually looking for a little bit of a drop from what we saw last month. As long as it's not a big outlier, I think the market remains intact. I think the market is going to trade based on the reports, especially that we're going to get this week and maybe even later today with Amazon and Alphabet. There's some big numbers coming out here, which really could set the course for what happens over the next few quarters.
All right, Scott, appreciate you joining us here. A great breakdown in terms of what to keep an eye on this week as we head into the jobs report, some of the activity that's related to currency markets that's been playing out this week, ahead of the Bank of England, still to come. Seems like that's one of our last central bank announcements in this round. And Scott, really appreciate you sharing part of your Tuesday morning with us. Scott Bauer, ladies and gentlemen, CEO of Prosper Trading Academy.